What's going on, everybody? As always, it's a blessing to be here. You're here with Yoel Exchange. I'm the crypto caressa, the forex finessa, and the stock successor. By that being said, guys, today's video will be about bonds and stock market collapse coming soon, or is it already here? Before we even get into the video, guys, if you guys are new viewers or recurring, then I ask you guys to subscribe to this channel with the bell notification so you can be notified every single time I drop information-packed videos, just like the one you're watching right now. And by that being said, guys, if you're interested in anything that has to do with crypto, forex, the stocks, then subscribe to this channel and share this video with your family members and friends and anyone that's interested in the financial markets so we can be financially successful and financially strong instead of being financially stable. By that being said, guys, let's get straight into this video after this beautiful intro.
Forex, everything is Forex.
So we'll be taking a look at one specific article, and then we'll take a deep dive in the technical analysis for about 7 or 8 stocks that I have listed up over here. But before we even get into that, guys, don't forget to subscribe to this channel and give it a thumbs up if you enjoyed it so far, and more content coming every single day. So stay up to date on what's going on in the crypto, stocks, and forex markets. Now let's dive straight into it. So the article we'll be taking a look at is called Forget a Stock Market Crash, the Bond Market May Collapse First. Sell TLT. So let's dive straight into the article. So we'll be taking a look at this, and we're focused for this specific part, focusing on the writer, Paul Franke. Thank you for this specific and very detailed writing and article, but this is what he had to say about it. I have been growing increasingly bearish and pessimistic about the outlook for the US interest rates and the bond market generally since the middle of 2020. The extent and pretense exercise of low interest rates and record rates of money printing can only continue so long. And this is a specific thing that people need to understand. They can keep printing for as much as they can and as much as they want to because they've been doing it. But there is a cut where they have to hit the metrics. And after that metric, they're going to be forced to decrease the amount of money they're printing or completely stop the money printing process that's going on. So continuing on, the Federal Reserve balance sheet is approaching 9 trillion, not million, billion, trillion, in bonds, a source of direct interference in our free market capitalistic system, outrunning any previous central bank shenanigans in human history. Now with inflation beginning to skyrocket as CPI YOY passes at 7% in December, either interest rates will rise markedly in 2022 to rebalance the economy, or we risk higher moves into the annualized 10% or greater CPI range by the end of the year of 2022, only rivaled by Civil War inflation. So nothing has been like this, or nothing has came close to this before until the Civil War inflation, and this is what he's comparing it to. So with a massive destruction, interest rates spike into the stratosphere soon thereafter. So this is what he had to say. This is just an intro to what the article is about before we take another deep dive into the specific sections and segments of the article. So if we scroll down over here, he said the fear in the US dollar value in foreign exchange markets. And the foreign exchange markets have been doing steadily. I won't say well, or they haven't been doing bad. They've been doing steadily, but some of the markets have definitely been declining. That's for sure. If you guys want me to make a Forex video, then let me know in the comments below. But continuing on, will not hold up the Fed sticking its head in the sand, refusing to raise rates any longer. And that's the main reason they're not trying to raise rates. They're trying to keep it all stable. They're trying to claim everything is going good when it's not going good. But that's the main issue with the United States dollar, as it's been devaluing. And I told you guys the greatest wealth transfer is coming soon. Be prepared, and it will happen with cryptos. But continuing on again, if we scroll down, this is a backwards rate picture. So below is a 27-year chart comparing 20-year treasury bonds interest rates versus prevailing CPI rates. So we come down here, this is the 20-year treasury rates and CPI. By the way, if you guys don't know what CPI is, quickly right here, Consumer Price Index and YOY. So this is a 20-year treasury rate. You guys can see it's been coming down drastically. Even 1995 was around 7.5%, but currently it's at 2.10%. And the CPI is, you see, 1995 was around 4, and now it's at negative 5.09, as you guys can see it. And the charts speak for themselves. Everything is honestly said. And money supply growth, you guys can see, boom. And even from 2020, boom, the billions of dollars. And this is the Board of Governors of the Federal Reserve System. But let's continue about what's going on in the energy sector, which is rising energy prices. So crude oil and other base commodities are still high to rising in prices. If you use, or if you have any gas vehicle, unless you're a Tesla owner or any other electric vehicle owner, even if you are those kind of vehicle owners, you notice the gas prices rising up. Regular gas around the East Coast is around $3.50, $3.80, if I'm not mistaken. And when you go to the premium, it should be around $4.20, and then it keeps going up. But it has been drastically increasing, and this is a fact about the energy consumer prices. So energy prices remain a key driver in businesses and consumer spending. So it's hard to forecast a slowdown in inflation until crude oil decides to take a breather. And what do they mean by that, to take a breather? I definitely can see it. They already said by 2030, any car manufacturer should only be making electric vehicles. So you have about 8 years left. So the most thing I can see the people with oil doing is taxing it more and more to only get the benefits of what they can reap in 8 years left. Not saying every vehicle on the road will be electric, because people still own gasoline vehicles, but still the prices that people are spending for the gas will decrease as more and more people get into the electric vehicle stance, and more incentives are provided to the people for getting electric vehicles. And those incentives are getting less and less each year, so take your advantage while you can. But like you guys can see as well, West Texas immediate quotes are 60% or higher than 1 year ago. So everything has been rising up drastically, not simply or small, but drastic increases. And skyrocketing real estate. Home price gains remains close to moderate record at 18% year over year. 18% year over year. Real estate is doing very well. But again, if you try and look for a home or buy a home, then unless you have money to spend, extra money to spend, you're definitely going to be spanked when they come to get your money. And in December of 2021, you guys can see over here, this is a Case-Shiller Composite 20-year price index Y year over year. You guys can see in 2010 it was around negative 20%. Now it's at 18.39%. How insane is that? And stock market wealth machine up 25% during 2021, the S&P 500. And now things are coming down. Just not trying to fudge you guys out, just trying to give you guys the info that's provided. And I'll provide you guys with the facts and the truth. You decide what you want to do with it. At the end of the day, you take the final measure. And you guys can see, just quickly show you guys, is everything else just talking about decreasing and even going below. So however, even bigger disconnect in pricing versus reality now exists in the US bond market. Speaking of reality, what are they going to do with the metaverse when it comes to pricing and, differences between reality? People will feel more included and more happy in the metaverse than they will in real life, unless they have money to take care of themselves. And if you want me to make a specific video on the metaverse as well, I'll make it. But this is just to give you guys. Now let's dive straight into the technical analysis aspect of this. So Tesla, as you guys can see, Tesla is in a small downtrend signal. So I have set an alert. If it comes down, I'm not expecting a big crash to happen. At the end of the day, Tesla is the last stock to fall down. It's just like XRP of the cryptos when things happen. But definitely in a downtrend currently, and it has to break above this, which has not broken above yet. But if it breaks above, definitely will go up to test around 1200. And if it breaks below, it's coming to the first support, which is around 865, and then it's coming below again. If it falls below this support again, it's coming back down to around this level, which I set the horizontal line at around $741. That's what I'm expecting from Tesla. But either way, I'll keep you guys updated, up or down. I'll keep you guys updated, and subscribe to this channel if you guys are interested or happy with what you've seen so far. And the next stock we'll be taking a look at is NIO. It was an uptrend for a little bit, but not anymore. As you guys can see, it's just been going down drastically, and we're on the weekly time frame, so everything looks condensed to just make it cleaner for you guys. By the way, the blue candles are bullish candles, and the red candle, obviously, is a bearish candle. I like to switch it up sometimes, just keep things interesting. But it's still in a bearish momentum and a downtrend. And the support I see for NIO is because it has already cracked below this specific support of $32. It's coming straight down to $21 if it keeps falling and does not find a strong resistance and cracks above it. If it doesn't crack above this resistance around $33, it's definitely coming back to $22. Keeping it simple. The next stock we're taking a look at is Amazon. We can get rid of this. This was a while back. We don't need it right now. So you see this right here? So I like to keep them sometimes because it will definitely come down and hit the specific zones that I have set for it. But over here, Amazon is currently hovering at 3,178. And if this is not a strong support, I see it as strong support, but if it's not holding up strongly, time will tell. We'll see. It will definitely come down to 2,927, which is an 8.20% loss on Amazon. And that's what I'm expecting for Amazon. It's been consolidating for a long period of time, as you guys can see in the specific box that it's in. And we can check for how long it's been consolidating for. Including today, it's been consolidating for 568 days, but it's been going up. Let's see, 29%, and it has came down 16.37%. So Amazon consolidating, but I can definitely see it coming down. Apple is doing very well. They're tapping into the metaverse. If you guys have not checked that out yet, check out my previous video. Big tech companies are tapping into the metaverse to milk all the money they can get from it. But Apple is consolidating at $169. If it falls below, next level is at $157. And Disney, you guys already know, has been coming down. It's still in a downtrend. The next zone I see for it, when it keeps falling down, it keeps coming down, is around 120, 136. And after that, 126. Just keeping it quick. I'm just going to tell you guys quickly because I don't want this video to be too long. But if you guys are interested, then let me know and I'll make more. It's Netflix. I see it at 510. Look how low it has come down. It has came down 24% since its previous all-time high at $701. You can get rid of this as well. All red candles. It has been, see, this was not a strong support. This was a completely weak support at 586. It went all the way up to 614. Now it has came all the way down around 16.93%. Might as well call it flatline 17%. But the next zone I see it coming down to is around 472, which is another, let's take a look at this, another 7.44% loss for Netflix. And Twitter, as you guys can see, Jack Dorsey dropping out did not help with the price at all. Or did not, it was just consolidating for a while, and now it definitely came down, and it has came down 40% for about 40 days. So it's coming down about 1% a day, which is not very good. And the next support I see for Twitter is at $29. Wow, which is another 23.63% loss for Twitter. So I'll just keep it right there. Don't want to put this video too long, but I want to give you guys condensed information-packed videos. So if you guys enjoyed this video so far, subscribe to this channel with the bell notification so you can be notified every single time I drop information-packed videos, just like the one you're watching right now. By that being said, share this video with your friends, with your family members, anyone that's interested in the financial markets, anything that has to do with crypto, forex, and stocks. By that being said, guys, I'm Yoel with Yoel Exchange. I'm the crypto Caressa, the forex Vanessa, and the stock successor. God bless you guys. I'll see you guys on the next video. Don't forget to subscribe. Peace out.
I surrender right now. I surrender right now.